So, hello, and a massive hello to everybody. No trade calls, recommendations, or responsible loan stuff. We're here for educational purposes only. So, quick little update here on the 6th of 12th, 2020. So, I'm just putting out this video on EURJPY just to talk about kind of like, there's never really a standard set trade, but I just wanted to discuss how some trades are more interesting than others, not only because of the asymmetry, right, but also because of the confluence, right, which would give you a lot more reason to believe or a lot more conviction behind your trade. Now, we're not huge fans of needing a bunch of confluence for a trade because we're fairly confident with even very simple or straightforward unique signals. But here it's a good example, so I thought it was worth going through. So here EJ's been behaving very, very technically, right? Especially from this big ramp off these lows, which was extremely technical. So you can see off these lows, we bounced into these highs. Now, this was a huge level in the past, 2017. We just clipped below, failed to get any traction at lows, failed to attract new sellers at lows. And this is a beautiful long. We actually traded this to the long side. And here what happened, we put in this break above the descending trend line A to B. We came right back down into C, pretty pure reaction back at the 50 back of that move from A to B. And we shot back up in extension and hit the 123 target. So up to here, very technical 123 target ahead of the descending trend line, which was a trend line from 2014. Now, what happened there? Then we pull the fib to the new highs. And here what happened, we come back down. This looks like it's probably something like a 38% retracement. And then we're coming back up and we're starting to fail right at these previous highs, right? So this was very, very interesting. And we're looking at this level going into the end of the week, looking for a potential double top, which is also, failure and protection of this trend line that it held before. Now, why was this interesting going into the end of the week? Also, because if you put up a weekly R3, this is just shut up because the day's open. It's Sunday night. But basically, it was stalling right ahead of weekly R3. We all know our stats on WR3, WS3. So this is an interesting level for it to look to stall on Friday, right? Furthermore, on top of that, a lot of other metrics led us to believe that this was, stalling a little bit here, closed the previous day back inside the daily Bollinger Band. If you look at it on the weekly, holding that Bollinger Band is coming in line with this descending trend line. Let's take the Bollinger Band off and let's go back on a daily. And you can see how the sellers were coming in and it was unable to attract new buyers at the previous day highs, which incidentally was in line with these previous highs and that descending trend line. So here, what this does is it gives you a lot of factors pointing to an upside wall, right? That means you've got the weekly R3 failure, number one, weekly R3, number two, failure at that previous day range high, number three, failure at that descending trend line, multi-year trend line, number four, a previous resistance that had failed, number five, all that resistance at the Bollinger Band. So this is an extremely interesting trade. Now, you don't know if it's going to, nobody knows if it's going to work or not because we're not in forecasting, in the business of forecasting or crystal ball reading. But what we do know is that on these failures at these highs, with depending when you're looking at something like a 15 to 20 pip stop, right? You've got a lot of help behind you, right? That brick wall. And even if you're moving back down into this previous resistance, you've got plenty of asymmetry on the trade. Now, why this is interesting is because of that failure on the daily level and because all of those bigger picture trend line, and especially if this move fails, double top, this would lead you to believe that there is plenty of room for this to fall to the downside, even if it's ultimately going to test to the upside, right? This could fall, you could target a 50 back of the move from here to here. But more importantly, if indeed it is a failure, if indeed you see a little bit of a correction on euro, which is at multi-year channel high, if you see a little bit of a correction on the dollar, which is sooner or later we're going to see some kind of correction on the dollar. If we see a little bit of risk off coming in, or just a tiny correction on the way equities have been trading, these are all things that are going to add a little bit fuel to this fire. So the way we would want to trade this, especially because we don't have a crystal ball, is again, look to cover some of our position, maybe 50% of our position, to make sure we lock some money in on the trade. And because we don't have a crystal ball, look to get paid even if the trade doesn't play out the way we expect it to play out, even if it turns back and we give back some of the profits on the remaining lots, and then target 50 back of this move from A to B to peel some more off, maybe 15 to 20%, and then hold the rest for a retest of these lows. And, maybe this trend line does work. Who knows? You still got a bit of a runner. But this is an example of, and again, there's a multitude of ways that you can trade this, but this is an example of a really interesting trade where for a very, very tight risk, you've got a lot of possibilities, not only on a tactical from a tactical perspective, but also on a trade that could turn into a swing if it catches a lot of people off guard and gets a lot of traction for very, very little risk. So again, hope that was useful. Let's see what we get. It might break as we open here in the Sunday night, but with this kind of setup, with this kind of confluence, with this tight risk, this is a trade I would always take eyes closed, even if it meant holding a little bit of risk over the weekend. Talk to you guys soon. Take care. Bye-bye.